Hey everybody, sorry for the dark screen. Audio is what's most important. Coming to you live from Miami Beach. Beautiful 80-degree day here, sunny. I won't see the sun much. Working on a lot of stuff. A few things I wanted to relate to subscribers via video. It's just easier to get really a few different topics off of my chest. And if I were to write it, probably wouldn't have gotten this out. So hopefully you can listen to this and we won't take longer than 10 or 15 minutes. But one of the most important things is sectors. I want to make sure that everybody is aware of importance of watching a sector and how it's trading to explain why a particular stock will be up or down. Let's use Encore for an example today. Getting a bunch of emails because it's down on really no volume, which also is important because these things, you know, if there's not a lot of buying on a particular day and somebody sells, it can go down percentage-wise a lot and then pop right back up because there's just no liquidity. But there is no reason why Encore is down whatsoever other than the fact that the sector has been very weak since I really got aggressive and we were pushing and bought that big block of stock at 12 cents from Till Capital. So we're down a little bit. Am I worried about it? Absolutely not. I think that, you know, just to be really blunt for folks that are traders, just sell it, just get out. Same thing with URRE and MGA. I love these stocks longer term, but in the short term, you know, listen, uranium and the sector, if the sector is making a decision that it's going to end up having a correction, and it went up so fast, so big, you know, in December and into the beginning of the year, it doesn't surprise me that we're having a consolidation. How long will the consolidation last? It could end today, or it could be months. You know, this is the way the cookie crumbles when we're playing the junior mining stocks. And again, you know, the reason I wanted to bring this up is because it really has nothing to do with the individual companies. Stock prices fluctuate. All I can relate to you is that if you have some patience, what you want to do is you want to be a buyer in environments like this. When the sector is down and your favorite names, the favorites that we have, are down, particularly like an Encore today. You can buy that thing at 10 cents or cheaper. To me, it's an absolute no-brainer. They're sitting on millions of dollars in cash. They have 30 million pounds of uranium, in situ uranium that is easily extractable from an environmental standpoint and a mining standpoint versus traditional underground mines. And a lot of stuff that can be done there with that money to acquire more projects on the cheap. I think we'll see a lot of news on Encore in due course, but you know, I'm not in it for day to day or week to week. Days like today, I don't even pay attention until I get a bunch of emails and then I look at it. I didn't pay attention mainly because I looked at it in the morning and it was down and there was no volume. So I don't really add a lot of credence to why a stock is up or down if there's really not a lot of volume. That's something you want to look at to really, you know, pay attention to and see if there's some concerns there, a reason to be really excited if it's going up. And then look at the sector. I looked at the sector and fission's down, Mega's down, Uranium Resources is down, the sector's down. So Encore's down. You know, it's as simple as that. There is no reason specifically. And that's why, you know, I stopped watching CNBC years ago because everybody wants a reason why the market is up or the market is down. This is the stock market. It fluctuates. It goes up and down. That's what it does. So, but I think it's really important to look at that because this also dovetails into the gold sector as well. You know, when the sector is moving up a lot, like we saw about 10 days ago on that big, last week on the big rally day after the Fed raised rates, you know, everything went up. You know, you don't look at Timberline or Mux or New Gold or any of those companies and say, well, why is it up? Why is that specific stock up? It's because money flowed into the sector, and they all go up. That's the way this thing works, and it's more powerful, frankly, the trend of the sector versus any individual news a company may have overall. Although things can buck the trend. In particular, I think discovery plays, like Golden Predator, for example. It's down since I recommended it. I really like that stock here. It's right on support. They've got a huge drill campaign going on this summer. And, this is a situation where I thought it was breaking out of its flagging pattern. It had a bit of a false breakout when I recommended it after they had some incredible additional drill results last week. But I'm not worried about it. I'm on the bid this afternoon. It is already, wow. I'm on the bid right around this price. I probably have already been filled. I've already got a big position, and I'm adding more on the pullback. These are the opportunities you want to really, that's why I also say on new recommendations, especially if stocks are up on the juniors, I tend to say, okay, well, buy half right away just so you have some in case it keeps going, and then save some dry powder if there's a pullback. That's typically my suggestion on some of these stocks if they're already up, but we still really like them for the long term or the intermediate term. I'll buy half, get some on the book. So if it goes up, I'm happy. If it goes down, I'm happy because I want to buy more. I've got money allotted to it. So the real thing I need to say today too is that, look, when we've got a lull in the gold sector, and there's still some cheap positions to be had in the sector, it's important to be like a farmer. This is the way I view this stuff in terms of my core portfolio. And that is to be planting seeds during this time, and then we'll worry about reaping when we've got a much more robust gold, silver, and mining stock market. And I don't really, obviously I like to trade. I do have trades on above and beyond my core positions, but there's core positions that I have. For example, let's look at like McEwen. Nova Gold. I have a certain amount of stock that is just there. I'm not going to sell it. If I get concerned about the short term, not going to happen. I've socked that away. It is in the account, good, bad, or ugly, and I will not sell it for a long period of time until I'm exiting the entire sector, because those are core portfolio positions. That said, if we see an extreme dip in gold stocks and those things get cheap, I'll add additional shares to trade upon the imminent or expected rally, and I'll make some money for my time, for example. But having an allotted core position where it's non-negotiable, unless something fundamentally goes to heck with the company themselves, which usually doesn't happen because we're betting on the asset prices and value in the ground, then say the idea about gold changes in long term, I become bearish, which really is not going to be the case. I'm bullish for a lot of different reasons. But if there's a change in fundamental investment outlook, then I'll look at it. But if there's just concern over the short-term movement of the sector or that particular company, those core positions don't get touched. And it's days like the Fed rate raise last week where you just want to have those core positions you don't mess with, because it would have been tempting to try to sell it, buy it back cheaper, and then all of a sudden they're up 15-20% in a day, and you're like, what am I going to do? I shouldn't have sold it. I got to buy it back. And then now they're back down. It can be just a complete mind screw if you don't have clear goals and intentions with some of these positions. I just want to reiterate, with specific company information, if there's something that comes out and changes, I'll tell you, and I'll say I'm out. I'm one of the guys in the newsletter business that is not afraid to say I'm gone. I'm taking this off for specific company reasons or for strategic purposes, whatever it is. Some companies, if I don't mention them for a while, it just means that I'm holding them, and I'm waiting to see what happens. Like Millennial Lithium has been really quiet, it's moved down, but it's right on support on its 200-day moving average. If it breaks down below the 200-day moving average, I'll stop out of it, take a loss, and move on. but it's likely to bounce from these prices. And lithium stocks have not exactly been on fire like I was hoping in March and February. That said, I still like the sector and I still like the story. And, it's buying on these pullbacks you want to do something. Patriot Gold's another example of one I've been quiet on for a while because they didn't have any news. But today we've had a lot of stuff released per my talk with the president last week and also the news with Canamex. So I've reiterated my bullish stance and I've begun buying more stock. I'm surprised that people are selling out at around a dime today. Super bargain there. As the clock ticks on Patriot and we get closer to the Moss royalty, flowing 1.5 plus million US dollars in cash flow going forward, meaning no dilution upcoming for Patriot. They've got cash in stock from Canamex. Also, they have shares in Northern Vertex they can begin to leak out and sell and raise money if they want to. So they're in a great position. You're going to see, and I'm just going to rattle off, but you're going to see some new updates this week. I'm going to have a new uranium pick possibly very soon, and that will be my last one on the junior side. I really like the sector. We're taking positions, and then we're just going to sit because if there's a new bull cycle in uranium, some of these stocks are going to go up 20, 30, 50 times in the next 5 years. And so, it remains to be seen if it was a dead cat bounce or not, but I think there's good evidence that we're in the beginning stages of a new bull cycle. On the gold front, today, gold and silver front, great news out of Southern Silver. Very, very bullish on that stock, my biggest silver position. And, one thing I will say is that we are going to be reopening the premium subscription option for free members this week. I mentioned that we get a certain amount, 30 new premium subscribers, and we shut it off for the quarter. I think I'm going to raise that to 40 people this quarter because we closed it out really quickly last time and we have a waiting list. One of the things that I'm going to entice you guys to subscribe to the premium, one of the reasons, besides the fact you get a lot more picks and a lot more content, is a silver company that I think has got as much or more potential than Southern Silver that I've been buying a lot lately and really pushing for premium members to build big positions in. It's about a 70, 75 cent Canadian stock. I think it could go to $5 in the next year or two, and really looks good. Lots of news coming up this summer, drilling, etc. So I think that one alone would be worth locking in your premium spot. We have a lot of demand built up for the premium. I think it's going to be closed out again within a week or two, probably, just because we want to keep that a premium service, and that means that I'm not just going to continue to take people forever. We keep a limit on it, and you really have an advantage in being a member. But that is a great silver play, Southern Silver, the additional one in premium that I'll mention. Love Bravada here, love Patriot here, love Timberline here, love Orca here. We had all of those companies except for Patriot spoke at the Phenom Investor Conference about 2.5 weeks ago. And we've been successful in finally uploading all the videos and presentations from the companies. And I'm going to slowly begin to release those presentations to free members after we get the premium folks that get to view them. I started with the first one today, and I'll just be dripping those out, pretty consistently, so you can see the CEOs themselves present the story. Audio's okay, not the best, but you can see the slides, you can hear the presentation, and sometimes it's just better to hear it from the horse's mouth and get into the details, which sometimes I skip over a little bit. Doesn't mean I've not looked at them. It just means that I know that people more so than not, unless I'm really writing a thorough research report, would rather have me just spoon feed the high points and not get into a lot of minutia. So, but these companies are presenting in a pretty concise manner, but giving detail, and I think it'll really help you understand the potential with these companies going forward. And I think that's about it. I would say that We've got some big news coming on one of our companies this week. I may be opening it up to free accredited investors to invest alongside of a placement that we are very heavily involved in. There's not going to be a ton of it available, but you will know the company, and it's really exciting what's going on there. And I think I will release that information in the next day or two. I might also release to free members a small uranium placement. This is the deal that I will be recommending soon. And the placement is the way to go if you're accredited, so you can get a warrant and a discount to the market. One of the gold company that I'm talking about, the placement is, you invest in it and you're up 40% on paper immediately based on where the share price is trading, and you've got a full warrant good for 3 years. These are the ways that I take big positions in the juniors versus just trying to buy them up in the open market. You can take a full swoop position pretty easily and quickly, and worry about selling it down the road in pieces, and hopefully with a lot more liquidity. So that's it for now. Again, just in summary, watch the sectors. If you want to email me or you're wondering about what's going on with a particular stock, just double check 2 things: the volume. And if there's not a lot of volume, it usually doesn't mean much, the fluctuations. Even if it looks like a big percentage move, it's not really hugely important unless there's volume. And then secondly, look at the sector. If the company stock is way up and there's no news and the sector's flying, that's probably the reason for it. Same thing on the downside. And on those days in the downside when the sector is off, if we're bullish long term, which we are, those are the times to be adding the favorite names. It's just, got to be a discipline. If you want to end up making a lot of money over the long haul, you have to get in the habit of buying low and selling high. And so, when you're a little scared because you already own some position and it's down, for me, that's when I usually get the best buys, and I have to just do contrary action to what I'm feeling or what I'm thinking. Most times that pays off.